AMD announced their Q3 earnings, which they actually pre-announced several weeks ago. So we get further clarity on the revenues and the lack of profits that the company put up in the most recent quarter. But we also got Q4 guidance as well from AMD. So we'll talk about the upcoming quarter. We'll talk about the gross margins. We'll compare that to where analyst estimates were with AMD for the upcoming quarters. We'll talk about in subsequent quarters heading into 2023. Do we believe this guidance? Is this possible? And then we'll come over here and look at this from a technical perspective. Like a lot of names in this sector, this one down big, but I am seeing in the after hours up about 2.15% on the heels of those Q3 earnings, which came out after the bell. What is going on, investors? Hopefully you guys are doing well out there. Buckle up. It's time to talk about AMD. Over the last year, stock's down 52%, year to date, down 60%. We got a $100 billion market cap on this one. So we'll keep that in mind as we roll through these numbers. Now, those third quarter numbers came in, revenue coming in at $5.57 billion. That was still 29% growth year over year, but the vast majority of that growth is coming from the Xilinx acquisition, which is lapping a quarter where they hadn't acquired that company already. But it's actually a good thing that they acquired that company, because when we get over here to the financials, you'll see that the embedded segment is producing a lot of the revenue growth and the profits over at this company. Now, we also got Q4 guidance as well, and that's really the most important thing I think of this report, because like we talked about, this guidance or this Q3 was actually pre-announced. They expected revenues right at $5.6 billion. We were actually just slightly underneath that at $5.57 billion. They also gave us the gross margins for the quarter coming in at 42%. They said back on October 6th that that's about where your margins were going to come in with AMD. Now, we got fourth quarter guidance. Revenue expected to be about $5.5 billion plus or minus another $300 million. So it could be as low as $5.2 billion. Could be as high as $5.8 billion if they're not sandbagging on that high end. Well, analyst estimates was for a number closer to $5.94 billion. And that $5.94 billion for the fourth quarter is actually walked back as well from previous estimates. It makes us wonder if Q1 is going to be able to come in at 5.83, and then heading into Q2 and Q3 of next year, are we really going to be able to reaccelerate back over $6 billion worth of revenue? Obviously, AMD announced a plethora of new products in the most recent quarter. We won't go through them here on the channel. I think it's somewhat irrelevant from an investor perspective to understand the nuances of the products, but I've been watching plenty of videos and reviews on these products, for the most part, relatively well received. But the uptake from the community, the uptake from the PC and the gaming world, probably going to take several quarters for those results to actually materialize on the results over at AMD. Now, they also gave us an update for those gross margins in the fourth quarter. They're expecting non-GAAP gross margins to be about 51% in the fourth quarter. Some of you might be wondering, like, the difference between GAAP and non-GAAP. I think here's the thing to understand. In the most recent quarter, AMD put 42% GAAP gross margins, general accepted accounting principle margins. Well, they guided for that 42%. The non-GAAP or the adjusted gross margins would have been about 50%. So the fact that they're guiding for non-GAAP 51% margins in the fourth quarter leads me to believe that those GAAP margins for the upcoming quarter still going to be a little light, because you notice last year on a quarterly basis, the company had 48% margins. For the last 9 months, year over year, you had between 46 and 47% margins. So these kind of low 40 margins, definitely something that investors will have to get used to. And I think in some ways it's already kind of priced into the steep decline on the stock. Let's jump over to these numbers. We had that $5.6 billion worth of revenue. Again, that was pre-announced. Our cost of sales went up year over year from 2.2 up to about $2.8 billion. They have some amortization of those acquisition that they made with Xilinx. That's coming in at $412 million. So that is hurting their margins to a certain degree. You could strip that out if you want. It's not going to make a huge difference, but it will make a small difference. So off of $5.6 billion worth of revenue, you have gross profit of $2.4 billion last year. You were closer to $2.1 billion. Again, we talked about that gross margin percentage. Last year is 48%. This year down to 42%. It looks like maybe subsequent quarters going to be in that kind of low 40% range. You have your research and development really skyrocket over at this company from $765 million all the way up to nearly $1.3 billion this year. You have marketing, general administrative also up from $376 million all the way up to about $560. Then you have more, I would call these not necessarily one time, but kind of pass through costs based on that acquisition that they made. So another $590 million there. And so that's really impacting your operating income at AMD. If you want to take this 412 up here in total costs and then another 590 down here in amortizations, well, you add that back in, that's like nearly $1 billion. That would really impact your operating income. In fact, it would put it on par to what you made for last year. Now, I'm not sitting here trying to make excuses for AMD. I'm just telling you how you can interpret these results. Also, the fact, again, the stock is down 60% over the last year. Some of this stuff is already priced into the stock. And it also brings up the point when we start looking out into subsequent quarters like Q2, Q3, Q4 of next year, these one-time pass-through type costs are likely not going to lap again next year. And so it's going to create some really nice comparables year over year. And some investors that don't dig into these numbers might not necessarily understand that. They might just look at the headline EPS, which is a disaster at just 4 cents per diluted share. Last year, you're at 75 cents per diluted share. Or maybe they look at the net income number where you went down from 923 million last year all the way down to 66. Or obviously this company from an operating perspective swung to an operating loss to the tune of 64 million in the most recent quarter, whereas last year they were at 948 million. Well, they might not understand that yes, there are some pressures on this business from a gross margin perspective. Yes, there's weakening demand in the PC and other segments of the business, but some of this is driven by the fact you have these pass-through acquisition related costs, which hurt these companies from, again, an EPS and an operating standpoint. When we flow down to cash flows, we'll see if it's impacting that to a certain degree. Now we're looking at the balance sheet. The company still has plenty of cash. What I noticed is they have plenty in receivables as well. Look at that receivable number. It went from 2.7 billion at the end of last year. This is not necessarily comparable year over year, but at the end of the year, you had about 2.7 in receivables. Now you got about 4.4. So that's a nice little uptick in money that should come down the pike at some point. You do have a fair amount of inventory. We've been seeing this across the board, not just in the chip companies, but in retailers as well. A piling up of inventory should, for the broader economy, actually should be better, okay? Because we're all looking at the CPI report, the Federal Reserve's basing a lot of their monetary policy on inflation. Well, with all this inventory sitting on the book, we should see a drawdown in prices. Obviously, margins took a hit in AMD, so it's already starting to work its way through the system. You see inventories last year, nearly 2 billion, all the way up about 3.4. So if there is a increase of demand, well, they have the inventory to kind of meet that. You'll notice over the last year, total assets went from like a gigantic 12.4 billion all the way up to 67. Most of it is into goodwill. When you make an acquisition like AMD made with Xilinx, is you add a lot of that acquisition to the asset side of the balance sheet in the form of goodwill. Occasionally you see write-downs. We did a video on Teladoc Health this weekend where they made an acquisition and they've had to write that down. By the looks of it, Xilinx looks to be, they probably overpaid to a certain degree for Xilinx, but from an operation perspective, it still looks like a very well-performing business. So I don't necessarily think they're going to have to make a lot of write-down charges into the future. You sometimes have to be worried about that when a company acquires a company kind of at the top of the market like AMD did. We'll certainly keep tabs on that, but right now it looks like that form of the business is still performing very nicely. They added some long-term debt over the last year, just $2.5 billion. They still have plenty of cash on there. And then probably from a net debt perspective, they're still positive. But from a balance sheet perspective, things look pretty good over at AMD. I think they're certainly going to be able to work through this kind of rough patch that the chip sector is in. Now, unfortunately, we only get selected kind of like condensed cash flow over this company. Probably when they release their 10Q, usually it's a couple days after these earnings report, you'll get a full readout of it. It's something that I'll take a look at. If there's anything of importance in there, maybe we'll do a quick video on it. But you notice that this company is still profitable from an operating perspective. You see here for the last 3 months basis, last year you generated $850 million with a positive cash flow running AMD's business. This year it actually went up to 965. And that is based on what I talked about during the profit and loss segment, the fact that these are non-operational charges that they had to take based on the acquisition of 412 million and 590. So inside of cash flows, you actually get to add those back in along with stock-based compensation, depreciation, amortization, other non-cash things. Those things get to add back in, and we just focus on in cash flows, the operating, the buying and selling and the operating of AMD's business. And from a cash flow perspective, it's actually better year over year. And then while we don't get a full readout on it, it looks like they were basically kind of break even from an investing and financing activities, those two likely canceling each other out. Now, the all important segment information at AMD, you can not only draw conclusions for AMD in this, but also other industries and other chip makers, Intel, Nvidia, all the rest. So we've got our data center still seeing some strength over here. Net revenues went from 1.1 up to about 1.6. Your operating income went from 300 million up to 505. They need that to maintain its strength. Now, the client, which is really PCs, you see your net revenues really slipped over here from 1.7 down to basically $1 billion. And that was all your profits. Notice you went from $490 million worth of net operating income last year. Now you swung to a loss of $26 million. Now you got your gaming segment over here. This actually showed some strength. You went from 1.4 billion all the way up to 1.6, and they've just released some new products, which could spur more growth down the line, not necessarily next quarter, but subsequent quarters into next year. Your operating income, however, here slipped from 231 to 142. My guess is they lost a little bit of pricing power there. The pricing on their products likely had to come down. That's where you probably saw the greatest margin compression. Then finally, you got your embedded segment. This is your Xilinx, because you noticed last year you only had about $80 million worth of revenue. After you completed that acquisition, you bolt on $1.3 billion worth of revenue. But here's where all your operating income is coming from. Yes, your operating income from the data center is still strong at $505 million, but $635 million from embedded segment. That is absolutely helping this company from an operating perspective. They had about 1.3 billion in expenses, and that gave us our net revenue minus expenses, gave us essentially a break-even quarter for AMD, which again, they pre-announced. The stock sold off hard, and the market is now digesting kind of this new reality with the chip sector where the growth is going to likely slow for subsequent quarters. With AMD, they're still going to show really strong growth in that fourth quarter, but again, that is due to the Xilinx acquisition not comping year over year. When those numbers start comping, you actually are close to break even from a growth rate year over year for AMD, but somehow Wall Street's expecting this to go back to a 20% grower towards the back half. That is going to be spurred by the product demand that AMD just released, all their new products, and we'll see how that works out in the marketplace, which is very competitive. You got Intel and Nvidia and others out there as well. From a technical perspective, you are locked up in this channel. I'll change this green line to purple. So our purple is basically our downward channel. We had support up here at 75. That got blown through. You had support up here at 99. Those are both be resistance areas on the way back, but we're so far away from them, I wouldn't really worry about them. You have bounced off the bottom of the channel here more recently, down here at about $56 per share. You're working your way back to the top. We should meet some resistance with this stock. Really, if it opens tomorrow at about $61, you probably only got another dollar in upside before you really hit your head on this upper channel. There is some consolidation with this stock back here in the 2020 to kind of a very late 2020 region where you had some consolidation between about 56 down to about $49 per share. This should act as some support for the stock. But of course, like we talked about, 75 was a very strong support for this stock. So was about $90 per share. We've just completely blown through that. Is enough bad news already priced into AMD? Have the earnings estimates for subsequent quarters come in enough? Are the gross margins going to return back to that kind of mid 40% range, even high 40% range, anytime soon for this company. These are still, I think, difficult questions to answer at the current time, and will have to be answered by AMD in order to really make sense of this valuation, because we're looking at a company that is going to do about, on the generous side, close to $24 billion worth of revenue, and we have $100 billion market cap on this one. While that's not the richest valuation in the chip maker segment, and if you don't reaccelerate back to this kind of like mid-teen, high-teen, low-20 growth rate, well, 4 or 5 times sales on a company like this definitely would be a rich valuation. So despite the big drop that we've seen in this stock, I actually think it's going to be a slow grind back up to the 70, 80, 90, $100 price tag, unless for some reason the demand comes back in full force and these margins snap back, which, based on the inventory levels we're seeing not only at AMD, but Intel and Nvidia, and the competitive nature in that market, I just don't necessarily think those are going to snap back anytime soon. I think you've got some time to accumulate this stock if that's what you want to do. And if you want to play it safe on the sidelines and wait for these margins to tick back up, wait for better clarity on the growth rate, where it's heading towards the back half of next year, I think you've probably got at least another quarter or two of results that can come in before you actually step in on a stock like AMD. And this probably applies to Intel and Nvidia as well. Hopefully, you guys enjoyed today's video. I'll be back again soon with more. Good luck with your investments.